Today our video topic about insurance in the United States. Please like and share my video. Insurance in the United States. Health insurance in the United States in any program that helps pay for medical expenses, whether through privately purchased insurance, social insurance, or a social welfare program funded by the government. Synonyms for the usage include health care coverage, and health benefits. In a more technical sense, the term health insurance is used to describe any form of insurance providing protection against the cost of medical services. This usage includes both private insurance programs and social insurance programs such as Medicare, which pools resources and spreads the financial risk associated with the major medical expenses across the entire population to protect everyone, as well as social welfare programs like Medicaid and Children's Health Insurance Program, which both provide assistance to people who cannot afford health coverage. In addition to medical expense insurance, health insurance may also refer to insurance covering disability or long-term nursing or custodial care needs. Different health insurance provide different levels of financial protection, and the scope of coverage can vary widely, with more than 40% of insured individuals reporting their plans do not adequately meet their needs as of 2007. The share of Americans without health insurance has been cut in half since 2013. Many of the reforms instituted by the Affordable Care Act of 2010 were designed to extend health care coverage to those without it. However, high-cost growth continues unabated. National health expenditures are projected to grow 4.7% per person per year from 2016 to 2025. Public health care spending was 29% of federal mandated spending in 1990 and 35% of it in 2000. It is also projected to be roughly half in 2025. Gallup issued a report in July 2014 stating that the uninsured rate of adults 18 and over declined from 18% in 2013 to 13.4% by in 2014. Largely because there were new coverage options and market reforms under the Affordable Care Act. Rand Corporation had similar findings. History. Accident insurance was first offered in the United States by Franklin Health Assurance Company of Massachusetts. This firm, founded in 1850, offered insurance against injuries arising from railroad and steamboat accidents. 60 organizations were offering accident insurance in US by 1866, but the industry consolidated rapidly soon thereafter. While there were earlier experiments, sickness coverage in the US effectively dates from 1890. The first employer-sponsored group disability policy was issued in 1911. But this plan's primary purpose was replacing wages loss because the worker was unable to work, not medical expenses. Before the development of medical expense insurance, patients were expected to pay all other healthcare costs out of their own pockets under what is known as the fee-for-service business model. During the middle of late 20th century, traditional disability insurance evolved into modern health insurance programs. Today, most expensive private health insurance programs cover the cost of routine, preventative, and emergency health care procedures. And also most prescriptions of drug, but this was not always the case. The rise of private insurance was accompanied by gradual expansion of public insurance programs for those who could not acquire coverage through the market. Hospital and medical expense policies were introduced during the first half of 20th century. During the 1920s, individual hospitals began offering services to individuals on prepaid basis, eventually leading to the development of Blue Cross organization in 1930s. The first employer-sponsored hospitalization plans was created by teachers in Dallas, Texas in 1929. Because the plan only covered members' expenses at a single hospital, it is also the forerunner to today's health maintenance organization HMOs. In 1935, the decision was made by the Roosevelt administration not to include a large-scale health insurance program as part of new Social Security program. The problem was not an attack by an organized opposition program as a part of new. The problem was not an attack by any organization opposition, such as the opposition from the American Medical Association that derailed. ये line sorry again repeat करती हूँ. The problem was not an attack by any organized opposition, such as the opposition from the American Medical Association that The problem was not an attack by any organized opposition, such as the opposition from the American Medical Association that derailed Truman's proposals in 1949. Roosevelt's strategy was to wait for a demand and a program to materialize, and then, if he thought it popular, to throw his support behind it. His Committee on Economic Security (CES) deliberately limited the health segment of Social Security to the expansion for medical care and facilities. It considered unemployment insurance to be the major priority. Children's Health Insurance Program. The Children's Health Insurance Program (CHIP) is a joint state-federal program to provide health insurance to children in the families who earn too much money to qualify for Medicaid, yet cannot afford to buy private insurance. The statutory authority for CHIP is under Title XXI of Social Security Act. CHIP programs are run by the individual states according to the requirements set by the Federal Centers for Medicare and Medicaid Services and may be structured as independent programs separate from Medicaid, separate children health programs. As expansions for their Medicaid program, CHIP Medicaid Expansions Program, or combine these approaches. CHIP combined programs. States receive enhanced federal funds for their CHIP programs at a rate above the regular Medicaid match. College-sponsored health insurance for students. Many colleges, universities, graduate schools, professional schools, and the trade schools offer a school-sponsored health insurance plan. Many schools require that you enroll in the school-sponsored plan unless you are able to show that you have comparable coverage from another source. Effective group health plans years beginning after September 23, 2010. If an employer-sponsored health plan allows employees, children to enroll in coverage, then the health plan must follow employees, adult child to enroll as well as long as the adult child is not yet the age of 26. Some group health insurance plans may also require that the adult child not eligible for other group health insurance coverage, but only before 2014. Federal Employees Health Benefit Plans. In addition to such public plans as Medicare and Medicaid, the federal government also sponsors a health benefit plan for federal employees. The Federal Employees Health Benefit Program (FEHBP) provide health benefit to full-time civilian employees, active duty service members, retired service members, and their dependents are covered through the Department of Defense Military Health System (MHS). FEHBP is managed by Federal Office of Personnel Management. Private health care coverage. Private health insurance may be purchased on a group basis, for example by a firm to cover its employees, or purchased by individual consumers. Most Americans with private health insurance receive it through an employer-sponsored program. According to the United States Census Bureau, some 60% of Americans are covered through an employer, while about 9% purchase health insurance directly. Private insurance was built for 12.2 million inpatient hospital stays in 2011, incurring approximately 29% of total aggregate inpatient hospital cost in the United States. The U.S. has a joint federal and state system for regulating insurance, with the federal government ceding primary responsibility to the states under the McCarran-Ferguson Act. States regulate the content of health insurance policies and often require coverage for specific types of medical services or health care providers. State mandates generally do not apply the health plan offered by large employers because of the pensions clause of the Employee Retirement Income Security Act. As of 2018, there was 953. As of 2018, there were 953 health insurance companies in the United States. Although the top 10 account for about 53% of revenue and the top 100 account for the 95% of revenue.